Good evening, students. Welcome to the next live coaching classes organized by Board of Studies, ICAI. This evening, we are going to discuss on paper 8, indirect tax laws, and we are going to have a discussion with respect to the amendments which are effective for November 2021 attempt. And as you are aware, when you are giving your attempt, generally there is a time span within which the amendments which are applicable, only those amendments are tested. For your November 2021 attempt, all amendments which took place right from November 2020 till 30th April 2021 shall be considered into picture. So this span of 6 months, November, December, right from Jan till April 2021, this 6 months is the period for which all these amendments in today's evening we are going to discuss upon. Before I go further, as a regular protocol, I request all of you are listening to me, please confirm on this chat window or question window, you're able to listen me and also my presentation is visible. If everything is good to go, I'll go further on my deliberation. And last session, there was one question which was raised by Tejal. I couldn't answer his question. I'll take up that particular question and then come back to today's our discussion. So meanwhile, I request all the participants, all the students to please post into the question window with respect to this availability of screen and also audible, whether I'm audible. So there was one question which was asked by Tejal in the last session. Before I was winding up, he said, sir, when there is an application for advanced ruling made by head office and assuming that there are different branches in India, so is that advanced ruling in relation to head office applicable to these distinct persons? So answer for that question, Tejal, and also for other students, definitely no. The advanced ruling which is served on a particular applicant, it is binding only on that applicant and not on the other distinct persons. So with respect to that point, my answer would be the advanced ruling, though it was served in relation to head office, it is not guaranteed that the same should be binding on my distinct person. That means to say branches. Like example of Bata, what we are talking in Angel. In case if there is an advanced ruling given in the state of Karnataka, say head office has sought for an advanced ruling, it is not guaranteed that the same advanced ruling or that particular aspect of question which was raised. For example, let's see in the example what we have discussed, if it was in relation to the chapel which was manufactured, whether that fits into the test of health-related supply, wherein an exemption notification can be enjoyed, I would say that that is binding only on head office. However, if any dispatches happen from head office to across India, that dispatches of exemption notification will be applicable only for head office, not for the branches. So with respect to the last point of last leg of discussion for all the students, advanced ruling is binding only on the applicant. In this case, if the head office has sought for this advanced ruling, it shall not be binding on the other branches. So that is answer to my last question, which was not answered in the previous session. And yeah, thanks for confirming Deepthi, Suyash Verma and Shafna. I will go further for our discussion. And before we proceed, I confirm that the last session, whatever MCQs I have shared in an Excel form, the answers for that MCQ has been uploaded on Board of Studies portal. So you can download that particular Board of Studies updated Excel version with respect to advanced ruling, where the problems along with solution was given in your website. And for today's session, along with this presentation, the Excel template was given, which has got a couple of questions in relation to the amendments, what we're going to talk in today's evening session. So friends, be ready with this presentation. One, second, the MCQ which has been posted along with this chapter. Third, your institute material. So be ready with these three aspects for our today's discussion. Now, what is there in store for us for today evening? First and foremost, we are going to talk about the amendment which was made under Rule 36. Rule 36 which talks about eligibility and availment of input tax credit. How I can take my input tax credit, what details have to be made available on a tax invoice, and what will happen with respect to the inward supply which have not been uploaded by the supplier through his GSTR1. So all that aspects with respect to Rule 36, we will try to understand. I have framed couple of questions with respect to Rule 36. When I come to this particular slide, I'll take you through the particular problem. How do we understand implementation of Rule 36? Then we move on to something called Rule 86B. Restriction which has been brought under electronic cash ledger. One of the major amendment, I would say, wait and watch for a question with respect to Rule 86B with respect to availability of input tax credit for utilization or payment of tax as per section 49. So this particular aspect, be ready with respect to your payment of taxes. When we read section 49, that point in time you would be understanding. So this Rule 86B along with couple of examples, I will take you through how to understand from its implication. Then amendments pertaining to registration. I believe that there is one discussion. There are two sessions which were conducted by Vignesh sir with respect to registration chapter. I wouldn't repeat all those provisions. Rather, we will focus only those amendments which are brought in relation to registration. I would say two major aspects were brought with respect to Rule 21 and 21A, which is going to create a havoc in terms of compliance for the assessee from implementation or compliance point of view. So these two major amendments, I also feel that one question with respect to this registration related aspect, you can wait and watch for your November 2021 attempt. Then thereby we have applicability of E-invoice where the threshold has been altered. Like initially when this E-invoice concept was brought in, 500 crores was the turnover. After that, they have brought into 100 crores. Later, they have changed to 50 crores. So the amendments what were made effective from 1st April 2021 with respect to E-invoice, we have a couple of slides to discuss upon. Then E-way bill related aspects. This E-way bill related aspects, this is connected with your registration chapter. A couple of changes which were discussed in relation to registration, the same are connected with your E-way bill provisions. And also, I would say from November 2021 point of view, these two aspects called registration and this E-way bill related aspects, these are connected. So these two topics, I would draw your attention to focus a little bit from your November 2021 point of view. Then we have a next topic called QRMP. This QRMP, I'm not going to lay any hands on that particular aspect for the reason you have this written chapter in detail discussed by some other faculty. So this particular aspect of QRMP and IFF statement, which was discussed in detail, I am not going to cover in today's discussion. As per the instruction, this chapter I am going to ignore from the amendments point of view. And for refund, finally, for refund under Rule 89, there are two clarifications issued by way of circular. So we will have that also as a discussion in today's session. So friends, this is our broad coverage for today's discussion. To start with, first aspect of Rule 36. Now, when I talk about these provisions, I try to keep my discussion as simple as possible from a student who has having minimal exposure or minimal knowledge on GST related provisions. So when we talk about Rule 36, this Rule 36 talks about the importance of documentation, importance of availability or claiming of input tax credit, documentary requirements and conditions for claiming my input tax credit. So whenever you go for an internal audit, whenever you go for a GST audit, you have to refer this Rule 36 when you do your purchase related coaching. I repeat, purchase related coaching. Why is it required? When we verify the availability of input tax credit, this Rule 36 explains us what are the conditions to be looked upon on a tax invoice for me to claim my input tax credit. So from that particular point of view, Rule 36 is relevant. And this discussion, this amendment, what we are actually going to see today is from this particular aspect of credits which are missed to appear in GSTR 2A or GSTR 2B. Now, first I'll explain you the provision. I'll take you to the Excel file for making you to understand how this particular provisions do work, right? Now, to understand our provision, let's look at Rule 36. Availment of input tax credit in respect of a tax invoice or debit note, details of which, they say details of which. Now, what they are saying, availment of input tax in relation to a tax invoice in relation to a debit note, the details of which have not been furnished. So, in case if my supplier has not furnished to supplier, what he has not furnished, either GSTR1 or IFF. In that scenario, the input tax in relation to this input tax in relation to these particular documents, input tax in relation to these two documents, they say I can take the credit which is not exceeding 5% of the credit available in respect of invoice or debit note duly furnished by the supplier. So in simple terms, they are saying that in case if you are taking an input tax credit, please understand that in case if the details have not been uploaded by your supplier, to that extent, you can take 5% of the details which are available on the portal. Now, there are two aspects which are highlighted here. This term furnished was actually shown as uploaded in my Rule 36. The term uploaded was changed as the term called furnished. And this 10% was amended as 5%. So friends who doesn't have much exposure in this particular thing, I'll put it this way. This particular availment of input tax credit under GST law is as good as your bank reconciliation. When a customer makes the payment, customer says that, look, this is your payment, your customer has sent you a payment advice. I'm supposed to receive a payment of rupees 1 lakh from my customer. My customer sends me a payment advice of 1 lakh. I can record that receipt of 1 lakh in my books of accounts only when that money has been hit into my bank account. So friends, what we are doing here, just because there is a payment advice, I'm not going to account that as a receipt. Similarly under GST law, if I have to avail my input tax credit, the input tax which has to be updated in my electronic credit ledger, this provision, Rule 36 says that in case if your supplier has uploaded, like earlier the language was used as uploaded. Now this language was changed as, instead of uploaded, they are changed as furnished. Now, uploaded was changed as furnished. Now, if I refer to section 37, my section 37 talks about filing of a statement called GSTR1. A person who is filing a quarterly return, that GSTR1 was replaced as IFF. So this GSTR1 was called as IFF for a person who is filing his monthly on a quarterly basis is GSTR1. So here they say your availment of input tax credit can happen only your supplier has uploaded his GSTR1 or IFF. Now the question comes here. So what will happen? I have a purchase invoice. My supplier says that this is the goods which I have supplied to you. On the basis of purchase invoice, can I take the input tax credit? Answer to that question, the department saying, look, to the extent the documents which are not available, you can avail ITC. How? Based on 5% of the credit available. They say 5% of the credit available in respect of invoice or a debit note. Only to that extent you can claim the ITC. Don't worry, this whatever I am explaining in terms of English, I'll come to my Excel file to make you understand how this logic is going to work. So friends, here for you to understand this particular provision, as good as your bank transaction. The moment my customer sends me a payment invoice, I cannot record my receipt entry. How do I check that? I go to the bank statement. In my bank statement, I am going to get that credit of 1 lakh. I am going to account that as a receipt. Alternatively, the moment I receive that payment advice, I have accounted something called receipt. The moment I have accounted as an inward entry, this should have a reflection in my bank statement. If I don't have, then I'm going to prepare something called bank reconciliation. So this is one aspect which talks about your Rule 36. Now, I'll come to my Excel file. And make you understand better with respect to this Rule 36. Let me share my Excel file. Yeah. Hope my Excel file is visible for you. Now, there are a couple of questions. Just let me see if any relevant to this or something else. There are a couple of questions raised with respect to the sessions. Shafna, with respect to the remaining topic and classes, you're going to get a schedule in a couple of days' time with respect to customs and foreign trade policy. They will be updating you with respect to the other aspects. And Shafna has asked what will happen to the remaining topic and remaining classes. Only the important aspects were guided by Board of Studies to take up for this batch 3. Whatever classes were covered already in batch 2, a few topics were asked for taking up as a special attention for November 2021. So all aspects which were there covered in batch 2. In addition to that, some important aspects only is being conducted in batch 3. When you go to the ICAI portal, Shafna, you have that batch 2 sessions also, where these aspects have been discussed. And there is one question with respect to this 12 of 2019 asked by Annapurna. Is there any specific section which needs to be referred for this 12 of 2019? Annapurna, you need to refer to section 10. That will give you clarity. And with respect to this Bata question, Namita, okay. This aspect of advance ruling, what we have discussed, head office, any clearances which happens from head office to the branches, only to those clearances my advance ruling is applicable. With respect to the distinct persons, definitely it is not applicable because the advance ruling is binding on the applicant. But my point of clarification when I was giving to this example, any clearances from head office, like with respect to the customs duty, what we saw, what I have explained the other day, from Singapore, any metal which is getting cleared into the Indian territory, the advance ruling which was sought by head office, that advance ruling is applicable to that head office. And any those clearances to the domestic tariff area, any of those units which are there within Indian territory, that advance ruling with respect to head office will be applicable. Like one to many. If goods are dispatched from head office to various branches, with respect to this clearances by head office, at the customs, this advance ruling should be applicable. And with respect to other branches, now can I take this particular advance ruling at branches? Answer would be no. So I tend to clarify this particular point of applicability only for that particular notification relevant at customs port, Namita, not for other aspects. In case if I have not clarified your aspect, Namita, please put back the question. I'll end of this session, I'll come upon this advance ruling once again. Now coming back to my Excel file, I draw your attention to this particular Rule 36 in this fashion. Hope you are able to see my Excel file and also this example which I have given to you. I'll explain one by one how this particular Rule 36 is going to work upon. For ease of reference, I just took simple figures and I just said input tax credit. When I say input tax credit, it could be IGST, CGST, SGST. So for a moment, let's assume that this is IGST, what we are going to talk about. So for the month of October 2020, say 1,500 rupees input tax credit in relation to purchases available to me. So whatever bills are received, I have accounted those bills in my books of accounts as per my books of accounts. For ease of reference, when I say books of accounts, let's assume that it is tally. In my tally, for the month of October 2020, in my tally for the month of October 2020, the credit available is 1,500. This 1,500 I have to claim in my GSTR 3B. Please note, when I file my GSTR 3B, on the basis of GSTR 3B, electronic credit ledger is going to get updated. I'll take you through one by one for better understanding. When I file my GSTR 3B, my electronic credit ledger gets updated. So, updation in my electronic credit ledger will not happen just because I have accounted in my books. So, this updation happens only through my filing of GSTR 3B, right? So, when I have accounted in my books, 1,500 is the credit available. Before filing GSTR 3B, as of today, if you log into the GST portal, there is something called GSTR 2B. My data of input tax credit auto-populated into GSTR 3B. This auto-population is on the basis of my supplier who has uploaded his GSTR 1 or uploaded his IFF. This term uploaded has been altered by virtue of this amendment. Now what they say, this term uploaded has been changed as furnished. This term uploaded has been changed as furnished. So here what they're saying, if my suppliers have uploaded their GSTR 1 or who have opted for quarterly return, if they have furnished their IFF, invoice furnishing facility. So if my supplier has furnished GSTR 1 or furnished IFF for the month of October 2020 only to the tune of 1,200, in that case, my credits missing for the month, 1,500 minus 1,200, 300 is a credit which is missing for that particular month. Assuming that I have put something called YTD, year to date computation of credits which are missing in my GSTR 2B. So till October 20, assuming that previous month there was no credit missing, only current month is missing, my YTD for the month is 300. Now, in this particular case, my credits which are missing is 300, my GSTR 1 missing is to the extent of 1,300. So what does my this rule 36 says? You can avail 10% of missing credits or 10% of the credits which are available on the portal or credits which is missing. I have applied something called formula. What I have said, the credits which are available on the portal, 1,200 into 10% or 300, whichever is lower, that is a proportionate credit I can avail in my GSTR 3B. So applying that formula, I'm going to get some figure called 120 rupees. How do I get this figure? 10% of 1,200 or 300, whichever is lower. I have 1,200, I have 300 rupees. So my rule 36 says that, look, whatever credits which are not uploaded by your supplier, do this way. Apply 10% on 1,200. Compare it with 300. Whichever is lower, you avail that particular credit. So I applied a formula here to get 120 rupees. For the month of October 2020, when I have to take my credit in my GSTR 3B, what will I do? 1,200 which is available on 2B plus proportionate credit of 120. I get a figure called 1,320. How do I get this figure? 1,200 which is available on my 2B plus 120 rupees which is proportionately calculated as per rule 36. If you see here, I applied something called 10%. Why did I apply 10%? October, November, the rate of missing credits is 10%. From December 2020, this 10% was changed as 5%. So this is one change factor you need to understand. From that backdrop, I have explained this particular example. Now, when I travel to November 2020, in my November 2020 books of accounts, as per my tally, I have accounted my input tax credit of 1,200 rupees. Out of this 1,200 rupees, ITC as per 2B. Now, my GSTR 2B shows total credit of 1,200. From that 1,200 credit, I can see that 1,000 rupees is pertaining to November 2020 and 200 rupees is pertaining to October 2020. So here, for the month of November, how much is the missing credit? 1,200 minus 1,000, I'm going to get 200 rupees, right? Now, how much is the YTD missing credits? 300 minus 200, 100 plus 200, 300. So this is my YTD. The Excel file which I have given to you has got this formula which will help you to understand this YTD. Now, this concept of YTD, why we have prepared, when you are doing your reconciliation, you as a professional chartered accountant, you need to have control on your numbers. What is the credit I have taken in my 3B? What is the credit which is there as per books of accounts? When someone asks what is the gap between these two, you need to have that reconciliation available in your Excel spreadsheet. So I have captured something called 300, which is my YTD figure. Then proportionate credit available for the current month. Now, for the current month, when you have to take a proportionate credit as per rule 36, 10% of 1,000 is 100 rupees. That 100 I compare with 200. Minimum of these two, lower of these two, 100 rupees is lower. So I take that proportionate credit of 100 rupees. So for the month, November 2020, I can take 1,000 rupees, which is available on the portal. On that 1,000, I can take 1,000, what is available, plus 300 rupees. How do I get that? 200 for the previous month plus 100 for the current month. Technically, you can say 1,300, but actually, how much should I take? I need to take 1,000 rupees, which is pertaining to 2B of current month, plus you can take a credit of 80 rupees. Like if you see your G7, 200 rupees is auto-populated pertaining to the previous month. Out of 200, I have actually availed 120 in the previous month. The rest 80 rupees of that is what I am going to avail. 1,000 rupees for the current month, plus 100 rupees for the current month, plus 80 rupees of previous month. That's how I'm going to get 1,180 to be updated, to be availed in electronic credit ledger. Now it looks very, very complicated. Now this rule 36 is such a fashion they have designed. The government has designed this rule 36 in that fashion. We don't have a choice other than to work in this particular lines. Now coming to December 2020. Now this is what I was drawing your attention to. November 2021 attempt where please understand this carefully. 1,800 rupees is a credit which I have accounted. 1,800 rupees is a credit which I have accounted for the books. Out of 1,800, I have appearing in my GSTR to be to the tune of 600 rupees. Out of 1,800, I have appearing to the extent of 600. So how much is the missing for the current month? Missing for the current month is 1,800 minus 600. I'm going to get 1,200. Now, 100 rupees is appearing pertaining to the previous month. Out of 300, say 100 rupees is appearing over here. Now here, proportionate credit, what I have to do? 600 on that 5% or 1,200, whichever is lower. I'm going to get 30 rupees. So how much should I take for the current month? I have to take 600 rupees plus 100, which is pertaining to the previous month, plus 30 rupees of current month. This is how I take my input tax as per rule 36(4). Now please carefully watch here. This 100 rupees when I am taking, if I have taken 100 rupees pertaining to previous month proportionately, now out of 200, I have taken 100 already. The balance 100 I am taking here. So if I say this 100 which is populated in this current month is pertaining to previous month, then you as a professional, what you will do, 600 rupees plus this 30 rupees proportionate credit. Only this you are going to avail in your GSTR 3B. Now the change factor here for your examination, your practical question is not going to be asked from this particular point of view. Absolutely don't get panic. Examination, they're just going to ask computation of this proportionate credit as per Rule 36.4. Examination, you would be tested for how do you apply Rule 36.4. This aspect would be tested on a month-on-month basis. So this is one factor you need to keep in mind. Especially for December 2020, you need to apply 5%, not 10%. Reason, this amendment what was proposed from change from 10% to 5% was made effective with effect from 1st Jan 2021. So this is one aspect you can expect from your examination point of view. Let me see if there are any questions on this particular discussion till now. Okay. There is one question from Namita with respect to this aspect of the terminology of change. Let me come back to my presentation and explain this. I'll come back to my presentation. Yeah. There's one question from Namita. Why is that this term uploaded has been changed to furnished? Now, this particular amendment, Namita, this is only to give little more clarity. When I uploaded GSTR1, like if you have a practical experience, like people who have filed GST returns, I'll explain this fashion. I, as a supplier, I can just upload the data onto the portal. There is something called data uploaded and submitted. People who doesn't have a practical experience of GST returns, I'll explain you how this fund is going to work. Step 1, prepare information of outward supply as per section 37. This is nothing but my GSTR1. I prepared my data for the particular month in a particular fashion. I have table 4A, 4B, 6A, 6B, table 5, table 8. Now there are various tables in my GSTR1. So I, as a registered person, what I'll do, I'll prepare my data in different tables or different fashion. B2B, B2C, zero rated supply, SCZ supply, your credit notes, debit notes, advances. So all this information which goes into different tables, I prepare that particular data. This is my step 1. Step 2, allocate step 1 into various boxes. I try to put into various boxes. Step 3, submit the data. Step 4, find using EVC or DSC. Now, this submission of data is nothing but furnishing of GSTR1. Filing is called actually filing of statement as per section 37(1). Now, for people who want to have better clarity, when the term was referred, when a term has been used, how we need to understand. So when I'm looking at the process of my GSTR1 filing, step 3, I'm going to click on a button called submit. The moment I click on submit, my GSTR1 was submitted. Has it been filed? Answer is no, it has not been filed. My data is just furnished onto the common portal. The filing happens only when I file that statement using EVC, that is OTP, or using your DSC. So this is called your actual filing of your GSTR1 as per section 37. Now here the department wants to give clarity. When you are referring to your input tax availment, like your bank statement, you need to understand that only those cases where your supplier has furnished his statement as per 37. That means only when step 4 is completed, you can avail the input tax credit. So technically there was a dot all along. When I say furnished data, even if my supplier is not filed GSTR1, can I claim the input tax credit? Answer was yes, because of GSTR2A, which was amended with GSTR, not amended, there was a new tool developed by the department called GSTR2B. I'm taking a little time of you, not that I'm trying to confuse, I'm trying to give more clarity with respect to understanding this particular returns. Students who doesn't have this experience or exposure to GST returns, I'm giving more clarity with respect to how this data or functioning or filing process is happening. My GSTR3B, it's a new facility, I'll say new functionality. This new functionality where GSTR3B is auto-populated on the basis of GSTR1 and GSTR2B. Now, what is happening here? The moment I file my GSTR1, my sales related information, from GSTR1 is auto-populated into 3B. Similarly, the government wants to control the input tax credit availment. So what they have done, my GSTR3B input tax has to be auto-populated. My auto-population of GSTR input tax credit has been linked to GSTR2B. So this GSTR3B has been linked to a function called GSTR2B. This GSTR2B is actually working on the basis of furnishing GSTR1. I'll put this thing to have better clarity. Let me just take shape. Yeah. My GSTR2B is going to get auto-populated only if GSTR1 or IFF has been furnished. They have used this particular term called furnished. So for this particular thing, now GST is getting settled over a period, since 2017, a lot of changes happened. One of that change is earlier GSTR2A is auto-populated on the basis of, I'll put it here for availability of space. My GSTR2A is auto-populated on the basis of this uploading GSTR1 or IFF. Like if I stop my filing at step 3 as a supplier, if I stop my filing at step 3, that information was coming and sitting in GSTR2A. Now for department, it was very difficult to control the input tax credit by the recipient. So for controlling that, what they have done, this term of uploading has been changed to furnished. So Namita, to answer your question, why this was changed? Because the government has moved from GSTR2A to GSTR2B for this change process to get aligned for your input tax credit. They have changed this language in my Rule 36 formula. And also this restriction of input tax credit, missing credits. Originally, October 2019, when this Rule 36 Sub-Rule 4 was provided, 20% was the input tax credit allowed. Subsequently, in the month of January, that 20% was made as 10%. And with effect from January 2021, this was made to 5%. So this is one change the government has been made. Now, why all these changes were being brought in? Government wants to have more revenue. To augment their revenue, wherever there is a possibility to restrict the inflow of credit, these changes have been brought into law. So that is how your GSTR1 That rule 36.4 has been amended. Now I'll come back to my presentation. Hope I've answered your question, Namita. Okay, people who are feeling that this is more technical from examination point of view, just hold it that they are going to test you the 10%, they are going to test your 5%, right? There is one question continuation to this rule 36. The question is read like this. Suppose Mr. A, a buyer, Mr. B, a supplier, sells 100 goods to A. This is only transaction between them, invoice of which not uploaded by the supplier. So the current month will be 0. Then credit for the buyer becomes 0. Yes, Namita, your understanding is perfectly right. In case if I don't have any other purchases, I have only one purchase in a month of, say, we are in the month of June. June, I had purchased goods worth 1 lakh. On 1 lakh, my supplier has given a bill for 18,000. I have a input tax accounted for 18,000 in my books of accounts. When I looked into my GSTR 2B or GSTR 2A, my supplier has failed to upload that particular details. What will be the credit auto-populated in my GSTR 3B? 0. So we cannot claim any credit. Answer is 0. I cannot claim any credit for the month of June 2021. So this is one change factor which was brought with respect to Rule 36. Coming further, Rule 86. I would say an important amendment with respect to availability and utilization of input tax credit with respect to electronic credit ledger. Wait and watch from your November 2021 attempt. I expect one question with respect to this Rule 86. Be prepared for your November 2021 attempt. Now, this rule is a non-obstinate clause. That means to say, this Rule 86B says, notwithstanding anything contained in any other rules. So when I refer to CGST rules 2017 or SGST rules 2017 or UTGST rules of 2017 of respective union territory, this Rule 86B says, look, nothing contained in any other rules. This Rule 86B has a restriction on electronic credit ledger. How? Let us understand. It says the registered person shall not use, they are restricting, shall not use amount available in the electronic credit ledger. Now, I'll stop here to make you understand. Amount available in the electronic credit ledger. Now, when how do I get this credit updated in electronic credit ledger? In the process of filing my GSTR 3B. So this rule says they are going to restrict the amount available. What they are going to restrict? The amount available in electronic credit ledger. How? To discharge his liability towards output tax. My restriction is to discharge the output tax. So here Rule 86B says whatever purchases you have done, that purchases, the credit what you have earned, this credit I am not going to allow you to set off with your output tax. How? In excess of, they say, in excess of 99% of such tax liability. This restriction is towards 99% of such tax liability. Simple terms. For a particular month, if I have to pay my output tax of 100 rupees, they say till 99 rupees you can use this credit. 100 rupees you cannot use. That means that balance 1 rupee you have to pay through your cash ledger. So this Rule 86B has brought in a condition saying that if you have your output tax to pay 100 rupees, till 99 rupees, I'll allow you to use your credit. The balance 1 rupee, please pay through your cash ledger. For whom? In case where the value of taxable supply other than exempt supply, other than zero rated supply. So in a particular month, I need to look into my details of turnover. So what I have to do? Draw your attention to Section 2, Clause 6, aggregate turnover. So when we have read the definition of aggregate turnover, do the computation of your aggregate turnover. For that particular month, you will see domestic supplies B2B, domestic supplies B2B, export zero rated supply. All this I bifurcate into two categories. One, taxable, another exempt and zero rated. So out of your total turnover, set aside exempted, set aside zero rated. The left out portion, if that value exceeds 50 lakh rupees, then this particular restriction is going to come into place. Now let's go further. Before I come to the problem, I'll take you through this provision, then we will come back to the problem. Now this particular rule 86B is effective from 1st Jan 2021. Again and again I'm saying, students, please watch for one question from your November 2021 attempt. Exceptions for the above rule. What are the exceptions? Like in the last slide, we have understood that I should be a registered person, and if my input tax credit, when I am utilizing, if my taxable value is exceeding a sum of rupees 50 lakhs in a particular month, other than zero rated supply, other than exempt supply, then rule 86B is going to trigger. Now, for this rule, there are certain exceptions. What are those exceptions? First exception for 86B, first exception, the same person or the proprietor, karta, managing director, any of its two partners. Now, when I say the same person could be a partnership, private limited company, Hindu undivided family, EOP, BOI, NRTP. Now, all these things can be called as a person. That person or proprietor. In case of a proprietary concern, the proprietor. Karta, in case of HUF. Managing director, in case of a private limited company or a public limited company. Any of its two partners. Now here, they have used two partners. Or whole-time directors. Or members of managing committee of association or board of trustee. What they say, have paid more than 1 lakh rupees as income tax in each of the last two financial years for which the time limit to file IT return has been expired. So here, this rule 86, when we are referring to, they have brought in an exception saying that, look, I'm not going to complicate your life. Actually, if you read this rule 86B, it is really tough for a common businessman, accountant who is not a professional chartered accountant or a cost accountant or a company secretary to understand these nuances. Now, this exception, what they have brought in, let's understand one by one. What they say, any of these persons have paid more than 1 lakh rupees. I should have paid more than 1 lakh as what? As income tax under ITL. Is it for 1 year? In each of, look at this carefully. They have said in each of last two financial years. So when I travel back to the last two financial years, in both the years, I should have paid income tax more than 1 lakh. So if I paid income tax of 1 lakh 1 rupee, this rule 86B is not applicable. If I paid income tax of 50,000 1 rupee, rule 86B is applicable. If I paid income tax of 99,999, again this rule 86B is applicable to me. When I say payment of income tax, sir, should I pay say 95,000 I have paid through TDS credits, where the credits are available in 26 years. 6,000 I have paid through self-assessment tax. What do you say? When I say income tax paid through self-assessment tax or the credits accrued on account of TDS, TCS, all put together. My income tax, if I pay more than 1 lakh, not 1 year, last 2 years, if I see, both last 2 years, my tax payment should have exceeded 1 lakh rupee. Then my rule 86B is not applicable. Is it? Like, it is not that easy, but this is how the rule 86B has been brought in. The concept why it was brought, when I come to my Excel file, I'll explain you the background why this particular innovation was brought in by the GST department. Now here carefully, if you see proprietor, the same like entity, if the company, now if the company itself, if the same person has paid, so if the company or like whomever you are saying, the person, HUF or LLP or a company or a BOI, single one-person company, OPC, if the person itself has paid more than 1 lakh rupees as income tax in in last 2 years, then Rule 86B void ab initio. It is not applicable upfront. Now what happens? So if the person has not paid, then you look for the other one by one in a hierarchy. If it's a proprietary concern, the proprietor should have paid more than 1 lakh. Sir, is there a difference between person and proprietor? Probably. If I have taken a separate GST number for the business, and if I have file IT return in my individual PAN, one PAN, like proprietor and person, most of the cases you have the same PAN, same GST number. So if the proprietor paid the tax more than 1 lakh, nothing to worry. 86B is not applicable. Next, other than proprietor, I talk about HUF. The cut-off HUF, if he has paid more than 1 lakh rupees, then again Rule 86B is not applicable. In case of a company, the managing director, if he has paid tax more than 1 lakh, does it make any sense? Company has not paid tax, but the managing director has paid the tax. The rule has been drafted such a fashion, you don't have a choice, you have to learn this as such. In case of a partnership firm, basic understanding, for a firm, 2 partners are basic requirement. So in case of a firm where more than 2 partners are there, and 2 of the partners, like if I have 5 partners, 2 of the partners should have paid in each of the last 2 financial years more than 1 lakh. Again, a complexity comes. The moment I say 2 partners, A, B, C, D, E. So first year, A and B have paid. Second year, C and D have paid. Look at the language. Any of its 2 partners have paid more than 1 lakh rupees as income tax in each of the last 2 years. So if A has paid in year 1, A should also have paid in year 2. If along with A, B has paid more than income tax of 1 lakh in year 1, B should have paid income tax more than 1 lakh in year 2. So consecutively 2 years, last 2 years, when I talk about financial year 21-22, I have to travel back 2021-19-20. For these 2 financial years, these 2 partners should have paid income tax more than 1 lakh. So partnership firm is also over. In case of a company, the whole-time director, if not managing director, whole-time director. So if there is a whole-time director appointed, and if that whole-time director has paid more than 1 lakh rupees as income tax in last 2 financial years, Rule 86B is not applicable. Last, members of a managing committee of association. If they have EOP, Association of Persons, whoever members are there in that committee, all the members, like members of managing committee, they didn't say one member, members of managing committee. Next is board of trustees. All the board of trustees should have paid more than 1 lakh. In case of a society, in case of society, I would be having my board of trustees. So friends, when I talk about Rule 86B, my Rule 86B is applicable in case if I am a registered person. Let me come back to my Excel file to explain in a better fashion. Yeah. Hope my Excel file is visible. Rule 86B. Yeah. Now, Rule 86B, what they are saying, value of taxable supply during a particular month should be exceeding 50 lakh. So, any particular month, the moment I have a taxable supply which is exceeding 50 lakh, and for calculation of that taxable supply, I have to exempt supply, anyway it is excluded. For the purpose of taxable supply, your zero rated supply should also have to be set aside. So if my value of taxable supply is exceeding that 50 lakh rupees, then I need to check this condition called income tax payment of 1 lakh rupees. Income tax payment of 1 lakh. The moment my taxable supply is exceeding 50 lakh, then Rule 86B gets triggered. Triggering point. Value of taxable supply in a month exceeds rupees 50 lakh. So the moment there is an excess of 50 lakh, you have to say rule 86B is triggered. For what? Restricting ITC to the tune of 99% of output tax. Right? So every month when someone talks about rule 86B, you need to say, I'm not going to say straight away. First I'll see whether it is applicable. Now exceptions I'll come one by one. So how do we check this rule 86B? First and foremost, I need to say for that particular tax period, what is your value of taxable supply? If my value of taxable supply is exceeding 50 lakh, when you are calculating that value of taxable supply, zero rated supply should be kept outside. The moment the value of supply is exceeding 50 lakhs, then you will say 86 is triggered. The moment 86B is triggered, what is the implication? My ITC from electronic credit ledger is restricted to 99% of the output tax. I repeat, my ITC is restricted to 99% of output tax. How does it work? Let's take an example. For month one, say I take Jan 21. My ITC is 12 lakhs. My output tax is 10 lakhs. Now, very well, what I can do? I can net off this output tax. For ease of understanding, I am saying IGST. ITC and output tax, ICAI, I am not bifurcated. Let us assume this is IGST. When I have ITC of 12 lakhs as IGST and output tax is 10 lakhs, they are saying that 10 lakhs into 99%, that is 9.9 lakhs, I have to use input tax credit. The balance I need to pay through cash ledger. This I'll say credit ledger. This I'll say cash ledger. This is my rule 86B. Now, for this rule 86B, first exception. What is that? Income tax payment exceeding rupees 1 lakh. Please understand. First exception. Income tax payment exceeding rupees 1 lakh. So when someone asks you, what is that income tax payment? That person, whomever we are talking, in the last 2 preceding years, when I talk about current year, I need to travel 1 and 2 years behind. There, my filing of income tax due date has been expired. If it is not expired, leave that year and travel 2 years back in the line. Where they say, if that person whom you are referring, if he has paid income tax more than 1 lakh, exact 1 lakh, not exceeding 1 lakh, they say paid more than exceeding 1 lakh, then rule 86B is not applicable. Sir, if that person has not paid more than 1 lakh, check the proprietor, check for HUF, that is Karta, check for 2 partners, check for managing director, check for full-time director, management, committee of members, association of person, board of trustees in case of a society. Check for these 7 people. Any of these 7 people paid more than 1 lakh in last 2 financial years, then rule 86B is not applicable. This is what my rule 86B first exception. Before I come to the second exception, whomever has got this doubt, I'm going to explain this concept, why government has thought of this innovative idea. Why government has thought of this innovative idea. I'll give an example of wholesale trader. Now, we all understand that this wholesale business, and generally, whenever you talk about a business, I have something called inventory. Inventory, ideally, any of the business you see, my inventory will be 15 days stock to 2 months stock. Right? Whenever I talk about my inventory will be 15 days to 2 months. My ideal norms. This is my closing stock. Now, I'm a wholesale trader. I'm saying wholesale trader. I have 1% margin. Margin is 1%. Now, I'll take example of say Jan 2021. Purchase sale. And friends, whatever example I'm talking, for ease of understanding, let's take IGST alone, forget CGST, just to understand the concept. Purchases, I have done, say, 45 lakhs. Just going to put this here. Yes. Purchase is 45 lakhs and sales I made to the tune of 42 lakhs. The rest is my closing stock. And assuming my rate of tax is 12%. This into 12%. Similarly, this into 12%. Now, 5,40,000 is my input tax credit. 5,04,000 is going to be my sale. Now, why there is a gap? The gap, like here, this is 101% of my purchase into 100 divided by 101. This is going to be my cost of goods sold. So what is my closing stock? My closing stock is purchase minus COGS, 3,41,000 on this 12%. Now what is happening here? I have so much of credit to my account which is pertaining to my closing stock. And when I say my output tax, this output tax is much lesser than the credit available in my credit ledger. Now, if this pattern is going to continue every month, month 1, month 2, month 3, like where this dealer never touched electronic cash ledger. Government felt this is a suspicious transaction. Government felt that something is wrong with this dealer. This dealer never saw a limelight for making the payment of tax through cash ledger. They feel that this is a suspicious or this is a fishy transaction. To control this particular thing, they have brought in this rule 86B. Again, now people are listening to me. You have a once you get qualified with your professional degree, once you join civil services, then you join this department or government offices, or you may join the economic advisory forum to the finance ministry. When you give suggestions, these are all the suggestions which come out of your practice as a finance guy. So as a professional, you'd say where there is a possibility to have a revenue leakage, you're trying to give your inputs to control that revenue leakage. That's how this rule 86B has been coined. And friends, this rule 86B is effective from 1st Jan 2021. So expect one more question from rule 86B. Examination, generally you have 20% weightage, where the examiner will choose which question to be tested from your knowledge point of view. So calculation, your examination point of view, they're going to test your knowledge. So what I'll do, I'll come to my MCQ, which I've shared today, come to question number 1 in sheet rule 86B. This is ABC & Co. have provided below information for the month of April 2021. Purchases 18%, purchases 12%, sales 18%. And respect to IGST, CGST, SGST, information has been given. Examine the provisions of rule 86B for payment of tax through electronic credit ledger. So the first question is examine the provisions of rule 86B. When they say examine rule 86B, straight away we cannot jump into exclusions. Examination, please be very cautious. I cannot jump into my exceptions while solving the problem. So they say examine your rule 86B. Here you will say rule 86B is applicable when the value of taxable supply for a tax period exceeds rupees 50 lakhs. Right? Now here, my sales in the particular month is 32 lakh 45,000. Did it exceed 50 lakhs? It didn't exceed it. So what you will say for the month of April 2021, for April 2021, rule 86B shall not apply for the reason threshold limit not exceeded. This is what you are going to say till this particular basic question of here. So please understand, examination never ever jump into conclusion straight away. And like for taking away your attention, I have given something called note. What does note say? Out of 3 partners, A, B, C, none of the partners have paid income tax exceeding rupees 1 lakh in the last 2 financial years. This is a note given. Now, just because note like here, if you see the note, it's a eyewash. It's a carrot to distract your attention. In my note, this partnership firm, none of the partners have paid income tax exceeding rupees 1 lakh in the last 2 financial years. Just because the exception is there, can I say Rule 86B is not applicable or it is applicable? I have to test first and foremost its applicability. So here, my Rule 86B says, if your value of taxable supply is exceeding rupees 50 lakhs, then you think about this, right? So since this value in this particular month, April 2021, it has not exceeded, I am not going to apply Rule 86B. While discussing this, first exception I have said about income tax. Now, let me go back to my presentation. I'll discuss one by one exception and I'll come back to this particular couple of examples which I tested here. I'll come back to this once again. Hope my PowerPoint presentation is visible. And let me see if there are any questions quickly before we go further. There is one question. Company is a separate legal entity, so income tax payment of company exceeding 1 lakh should be seen. So why we are saying the managing director? The question with respect to this slide, what was asked by Namita. So generally, if you read this slide, look at the first aspect, the said person. If the person has paid income tax more than 1 lakh, Namita, no need to check further. Straight away we'll say 86B is not applicable. What if the person, that is company, has not paid? Then they're saying if the managing director or whole-time director. Who is the managing director? Generally, like reference to the General Clause Act, a company has got a managing director. A company has got a whole-time director if appointed. Now, in this case, a person who happens to be a company, that company has not paid income tax more than 1 lakh. Why? They have accumulated losses. Maybe, it's a startup company. First year, they had a profit of, say, 1 lakh. On 1 lakh, they could have paid 30% corporate tax, 30,000. Second year, they had a profit of 2 lakhs. On that, they could have paid 30%. Don't mistake with my ITL rates. Assuming 60% they paid income tax. But however, they had a managing director. For that managing director, they paid a salary of, say, 50 lakhs. That particular managing director paid a tax of 1 lakh, income tax. Now, they're saying, when I'm talking about Rule 86B, nothing wrong with the company. This company made profits. These profits were visible where managing director took a salary more than the taxable income. When I say 1 lakh, now you're all professional chartered accountants. Do a little bit of math. When I say this math, 1 lakh, you have income tax rate, a slab of 10%, 20%, 30%. When I talk about these slabs, I'm not talking about company. I'm not talking about your partnership firm. I'm talking about the individuals. Assuming I'm under 10% slab, what should be my taxable income? Assuming I'm under 20% slab, what should be my taxable income? Assuming I'm under 30% slab, what should be my taxable income? Now, somewhere income tax department, like someone who has made this advice to the department, they would have thought all these aspects. That's how they're linking. If any of the managing director has paid income tax more than 1 lakh, so they're linking. They're saying that this is not a bogus company. This is not a shell company. This is not a defunct company. This is a good company that you can trust. That's how they're building the interpretation. Composition scheme supplier. Namita, composition scheme, there is a benefit of input tax credit. I don't use my input tax credit. Whatever collection is there, I calculate 1% and take to cash ledger. For composition, there is no benefit of ITC. Yes. So this is not applicable for composition scheme. And again, thanks that you've asked that question, Namita. Examination, when I was saying from November 2021, expect a question. Your examination, the Excel file, what I've showed to you, ABC and Co. Everything I've explained. Now input tax there, for a moment I'll not say input tax. On purchases, the tax is paid. I just leave it at there. And end of that, the assessee, ABC and Co. is paying tax under section 10. Examine applicability of rule 86B. There you will say, the rule 86B is applicable only for the purpose of restricting my input tax credit. When I am under composition scheme, section 10, where is the question of ITC availment? I don't agree ITC. So rule 86B, the question itself is not relevant. So that's how you will answer to that particular question of composition scheme. Now, this particular notification is applicable from 1st Jan 2021. Now, going to the exceptions. What is my second exception? Now, exception B and C clubbed together. The registered person has received a refund of amount of more than 1 lakh rupees in the preceding financial year on account of unutilized input tax credit under zero rated supply made without payment of tax, inverted duty structure. So here they say, one, I'm going to link it to your income tax. Second, I'm not going to link it to your income tax. Rather, what I'm going to do, link it with your refund. If the refund amount is more than 1 lakh, the preceding financial year. Now, the moment I say preceding financial year, look at the human mind. Is it one refund application? Is it multiple refund applications? Assuming in the last financial year, this particular assessee made 5 refund applications. Every refund application, 50,000, 60,000, 40,000, 90,000, none of the amount exceeded 1 lakh. Now, please understand, received a refund of more than 1 lakh in the preceding financial year. They never said per refund application it should be exceeding 1 lakh. In my last financial year, cumulatively, my refund, the money what I have claimed as a refund, should be exceeding 1 lakh here, 1 lakh. That's what they say. Now, this is how you need to wait and watch for your questions in your examination, professional examination. Truly, the spirit of your knowledge testing happens in CA, and they try to test your interpretation. The reason, if you people who have not exposed this indirect taxation, if you try to question why is that so much of being tested, it's called testing in between the lines. You as a professional, once you get qualified, when you get into the contract waiting, once you get into drafting, you have to read in between the lines how this particular aspect has to be implemented. I used a term called decree. Last class, if you remember, there's a judgment, there's a decree. The judgment has to be implemented by virtue of a decree, pith and pin. So when you read one by one, word by word, verbatim, you should know how to connect the dots. So that's how when I see this provision, they say the registered person has received a refund. Refund from whom? From the GST authorities. Of what? More than 1 lakh rupees in the preceding financial year on account of unutilized input tax credit. Now here they say unutilized input tax credit. For a moment, if I ask you to examine the provisions of section 54, people are listening to me, please take down your notebook, write down whatever I'm going to say. Put the heading section 54 under that. Methods for claiming refund. 1. Unutilized input tax credit. 2. Export with payment of IGST. 3rd. SEZ supply with payment of IGST. 4th. Refund under section 77. Erroneous payment. Refund under section 77. Erroneous payment. Next. Excess payment of tax. Last. By way of a decree, by way of a order. These are the modes where I as a registered person can file a refund application. So when examination you are being tested, it is not a refund blindly. Like I'll come to my Excel file just to connect to your understanding. Let me come back to my Excel file. Exception 2. My exception 2, it says that unutilized input tax credit. Unutilized input tax credit. So, when I was talking about this refund, I'm talking about financial year 2021. Say, export with payment of IGST. Say 55,000. Again, for ease, I'm saying IGST. Please understand carefully. Export with payment of IGST 55,000. Later, unutilized input tax credit. I got say 32,000 under section 77 erroneous payment. I got 45,000. Then by way of a court order or decree, say E-way bill related issue. Erroneously department has collected tax that I got a favorable order. By virtue of that, I got a refund of 24,000. Now I'll put a total over here. Now, when I am asked to examine Rule 86B, they'll ask you the question, whatever I showed Excel file, say this Excel file, this particular table will be given, ABC and Co. Along with that, a caret of note will be given. What is that note? They have given beautifully this financial year 2021 from the books of accounts maintained by the SSC. The refund which has been claimed reflected in the books of accounts is like this. Examine the applicability of Rule 86B. Straight away, because the refund claim is exceeding rupees 1 lakh, the SSC rule applicability of Rule 86B is not there. This is how we jump into conclusion. Please pay attention to the provisions. I'll come back to my presentation. In my presentation, in this particular provision, they have said it should be on account of unutilized input tax credit, not otherwise. So if it is on account of unutilized input tax credit, I will look into this threshold limit of 1 lakh rupees. Right? So this threshold limit of 1 lakh rupees will be applicable only in case of unutilized input tax credit under zero rated supply under inverted duty structure. So when I file my application, one is for zero rated supply without payment of tax, another is inverted duty structure. So when I am going to file this refund application for unutilized input tax credit, currently under section 54, please make a note, 54 subsection 3, clause 1, clause 2. I repeat, 54 within brackets 3, within brackets 1, comma 2. These are the two provisions which talks about my unutilized input tax credit. So for you, when they are talking about Rule 86B, only on account of this unutilized input tax credit, if it is exceeding a sum of rupees 1 lakh rupees, then my Rule 86B is not applicable. Coming back to my Excel file, for computation, this is your amount. You will put your remarks. Examination, what you will say? You will put remarks. Not eligible. Not eligible. Sorry, this is eligible. Not eligible. Not eligible. So out of entire thing, my eligibility is only 32,000, right? So when my eligibility is 30,000, my exception, second exception, what is my second exception? My second exception is refund on account of unutilized input tax credit exceeds 1 lakh. So you will give a conclusion saying that my applicability of Rule 86B aspect to be checked is verified is in relation to obtaining refund on account of accumulated input tax credit and not otherwise. Since the threshold limit of rupees 1 lakh is not exceeded, accordingly, Rule 86B is applicable. Right? This would be your answer. Let me see if any doubts are there before I go further. Good. So far so good. I think you're all following with me. There are no further doubts on this. Let me come back to my presentation. And friends, this Excel file, what I'm talking to you, what I'm working over here, this Excel file as it is will be put back onto the board of studies. Maybe by tomorrow evening, this will happen. So absolutely don't worry. This Excel file also I'm going to put it for your convenience purpose. Restriction on 86B, two exceptions, B and C. In fact, if you read the provision, it was separate, but I clubbed together for your convenience purpose. So B and C, refund of 1 lakh, then this is also not applicable. I'll finish this Rule 86B and I'll give you a break for 5 to 10 minutes. Just bear with me. Last class, I think Priyanka or Priya has asked for a break. So this class, I'm going to give a break for 5 to 10 minutes. I'll finish this Rule 86B and then we'll go for a break. The fourth exception. This is little complicated. Now, this fourth exception, if you read, this is as if they gave a benefit which never existed at all. The art of drafting, if you read this rule, this particular provision, you feel excellent. There is something called negotiation skills. Once you get into the corporate world, someone like this who is into marketing, who is into business deals, someone should be of this sort. I would say hats off. They have put this provision such a manner that no one knows that this is as good as a condition of main 86B. What does it say? The registered person has discharged his tax liability, his liability towards output tax through electronic cash ledger for an amount which is in excess of 1% of total output tax liability applied cumulatively up to the said month in the current financial year. Or, okay, I'll explain this and before going to the other slide. So here what they're saying, when you're talking about this exception, very, very cleverly they say, the registered person has discharged, means he has paid what? His liability. This registered person has paid his liability for what? Towards output tax. How? Through electronic cash ledger. So that particular registered person, he has paid his output tax through, now when I say output tax, I'll halt here, don't read further, just be with me. Whenever I talk about output tax, I say payment of taxes. Please make a note in your working notebook, section 49, which talks about your payment of taxes. So when I talk about your payment of taxes, I have a choice to pay my output tax using electronic cash ledger, electronic credit ledger. So if I have paid this tax, not through credit ledger, through cash ledger, I say credit ledger, cash ledger. Credit ledger ruled out. Left out is your cash ledger. if at all, if I have paid my output tax through cash ledger for an amount which is in excess of 1% of the total output tax liability. So knowingly or unknowingly, when I look at the financial year, my financial year starts from April, any particular month, like if I see YTD, you have to prepare something called YTD figure. In any of these months put together, you could have paid tax to cash ledger. And that particular amount, that particular cash ledger amount, applied cumulatively. So if I have applied cumulatively, YTD, when I say cumulatively, it's nothing but a YTD figure. Up to said month, this calculation of cumulative should be till current month. And this is in current financial year. Then my rule 86B is not applicable. I'll come back to my Excel file to make you understand this provision. A very, very cleverly vetted provision. I have given this Excel file. I hope this Excel file is visible for all of you. What I have done here, I have just put some math. My December, Jan, Feb, March. This is my financial year 2021. Month on month, you see my input tax, IGST, CGST, SGST. My output tax, this much every month. Now here, 282 is what I have to pay. I have input tax of 285, but still I paid 1,500 through cash ledger. Why did I pay? No reason. I wanted to pay, I paid. Like department should not feel bad. Now this is a human sentiment. No, that officer may feel bad that you're not depositing any cash every month. He's calling every month to the accountant. Yeah, some money, please pay through cash ledger. No, this is on the request of the officer. Though I have sufficient balance in my credit ledger, at the instance of the officer, I'm paying this money in cash ledger. So here what I have to do as per this sub-rule, exception 4, if you see here, my total payment through cash ledger 3,500, 5,000, 5,000. How do I check this 1% criteria? My 1% criteria is output tax into 1%. So here, any month, you need to have this kind of information plotted and check at this total. Cumulatively, if you see my output tax, my total output tax is 28 lakh. On that, I need to pay 28,000. But how much I have paid? I paid only 13,500. Then rule 86B is applicable. Why? When I look into this calculation, every month when I do this, my total output tax on this 1% comes to 28,000. Of that, my payment through cash ledger is only 13,500. Since my payout is not more than this 1%, 286 days applicable. I'll come back to my presentation. This is how a fourth exception was given invariably, which is actually not required. Next exception. This is the last exception. Government has to trust whom? Government, the GST authority, they should trust whom? They should trust these people. Who? The registered person who is a government department, who is a public sector undertaking, who is a local authority, who is a statutory body. So since these are all controlled and managed by central or state government, the government authorities felt that let us exclude this rule 86B for these people. Also, in addition to that, commissioner or an officer authorized by him in this behalf may remove said restriction after such verification and such safeguards as he may deem fit. Now, generally, it so happens that every month this is going to be a nuisance for people who are working on a thin margins, 1% margin or 0.5% margin. Volumes might be high, but they have this 2 months holding stock. I'll give example of ITC. I'll give example of Hindustan Unilever. Now, these are all highly voluminous business where you need to have 2 months of inventory at any point in time for the purpose of business rotation. Now, when I have that 2 months of closing stock, where is the question of me paying in my electronic cash ledger? That point in time, exception 1, payment of that income tax 1 lakh. Exception 2 and 3, refund of 1 lakh. Exception 4, this cumulative, or exception 5, no, it should be any of these. If nothing is possible, I'll write to the officer saying that, look, this is the facts, this is my audited financials, this is my performance, you tell me what I have to do. So these are the aspects with respect to Rule 86B. So friends, we are at 7:30. I'll give you a break of 10 minutes. Let's resume back at 7:40. Any doubts meanwhile, you please put it to the question window. Once I resume back, I'll take up your doubts. Any sort of doubt you have on the problems, whatever we have discussed, or any other topic, not only for today's session. In general, if you have any doubts, feel free to post onto it. There are a couple of questions asked by Shafna and others with respect to other topics of coverage. As I repeat, this batch 3 is from your November 2021. Only the important aspects are being discussed. Your batch 2, all the topics have been discussed and it is all the videos are available on the link of students' website. And Board of Studies has picked up some important aspects for batch 3 considering from November 2021 point of view. Right? Now, I'll come back to my further discussion on Rule 86B. We have finished. I'll go to the next aspect. Please confirm meanwhile, my audio and presentation is visible. For others where I have taken break in between, please confirm this audio is available and the video of my presentation is also visible. Once you confirm, I will go further. And when we talk about amendments, these amendments are not coming just like that. Let's see, when this law was drafted, there are some printing mistakes, there are some interpretational issues, there are some business aspects which are not felt or not thought of. As the law is evolving, as the business is evolving, wherever they felt that it is required, they have been keep on doing corrections to this particular law on need basis. Please confirm, students who are viewing me, if you can give a thumbs up, I can go ahead now. There's a little time lag between your query posted and available to me. Once you confirm, I think I will go ahead with the discussion. Meanwhile, there is one question from Annapurna. I'll clarify that. Exception 4 says up to the said month in the current financial year. What does it mean? This example, what I've showed you, Annapurna, the Excel file, I have taken till March 2021. Let me come to my Excel to make you understand this. Let me come back to my Excel file. See, for a moment, Annapurna, this March 2021 is not there. I'm just trying to I've just pasted here for convenience. As on Feb 2021, we are doing this activity, Annapurna. When we are checking this applicability of Rule 86B, what I have to do? As on Feb 2021, my output tax is 20,48,000. On 20,48,000, 1% we need to calculate. How much that comes to? 20,480. This 20,480 was it paid in cash ledger cumulatively as on that month? Answer is 11,500. Since 11,500 is less than the 20,000 whatever figure we are talking, let me put the total here for ease of understanding. My actual payment through cash ledger, I compare with what is expected. I call this as actually paid. I call this as expected. As per your fourth exception, my expected is 20,400, 20,480, but actually I paid 11,500. So as on Feb 21, Annapurna, when we are asked to examine applicability of Rule 86B, your answer would be the assessee has paid, assuming the threshold limit of 50 lakhs, what we have spoken, it exceeded. Yeah, definitely it would have exceeded because 9 lakh I am talking, and maybe like considering 18%. I'm just doing a reverse math to confirm. Yeah. For December, it exceeded 51,22,000. The moment it exceeded, my Rule 86B is triggered. So what it says, once your Rule 86B is triggered, they're saying you need to check to get out of your complaints with 86B any one of the month. any one of the month, your cash payment should be sufficient enough, for what? For paying 1% of the output tax YTD, year to date. So when we are talking about YTD, my rule 86 be triggered in December. Triggering point. Here I'll say no. Here also I'll say no. For December 2020, I ought to pay 99% through input tax, 1% through cash. But did I pay that 1% through cash? For December, out of 9,22,000, that 1% comes to 9,220 rupees. How much did I pay? I paid only 5,000. That shortfall, I would have argued with the officer, sir, I didn't pay it in December. You see my further track, Jan, Feb, March. I have time till March. Don't worry, I'll make the payment till March. Why? My fourth exception says, any of the tax periods, that 1% norm if I met, it is good enough. So I'm escaping from December, saying that, don't worry, I have December, Jan, Feb, March. I'll take care of that in future. But did you took care of that? Rightly, what Annapurna asked, now when I look into this, though only for December my rule 86 is applicable, other months it is not applicable, but whatever I have to pay in December was not paid till Feb 21. Even if I consider March, it was not paid. So this is how I check my that fourth exception, Annapurna. Hope I have clarified your doubt now. I'm going very slow and I'm covering in depth so that you can get more understanding on these aspects. Okay. I'll continue with my discussion. I'll come back to the presentation. Yes. Now, going further, amendments in registration. This particular aspect, amendments in registration, this is again wait and watch for not examination point of view, but practically from the business perspective. Very, very tricky one. This amendments brought for registration, I would say, little tricky provisions, the way they have drafted these provisions. So first amendment in registration, there was a small change in English. The persons were exempted from getting Aadhaar authentication. Aadhaar authentication, let me just highlight for your better understanding. Aadhaar authentication. What do you mean by Aadhaar authentication? These days, if you see, everything is linked with your Aadhaar. Everything is linked with your Aadhaar. So this registration also when they are doing, they wanted to ensure that you have got a valid authentication through this particular Aadhaar. Where the person is available, where the registration is being obtained, who is the person who is taking the registration, all these aspects. So there are certain exceptions. Not every person can have Aadhaar. Like example, partnership firm cannot have, company cannot have. A company headed by a person who is not an Indian, non-resident of India, it cannot be possible. GST number for a government undertaking, your public sector undertaking, your local authority. We cannot expect to have GST for other authentication. Now, this is one new process which was brought in the process of your GST registration. In the process of your GST registration, what they say, when you apply for your registration, ensure that you have this linking of Aadhaar. You have linking of Aadhaar. So this particular aspect is what they have brought in your registration process. In this particular registration process, earlier they say this Aadhaar authentication is not applicable for authorized secretary of all types, managing and authorized partner, Karta of Hindu or divided family. For these people, this is my older exemption notification. From this particular exemption list, they say it doesn't make a sense. Rather, let me put it this way. This exemption, like negative to negative, is positive. My individual Aadhaar is required. In case of individual, Aadhaar is available, it is required. Authorized signatory of all types. Who is an authorized signatory? Managing director, manager, partner, authorized partner. No, authorized signatory, Aadhaar, individual being an individual, it is required. Managing an authorized partner, again individual, Aadhaar is required. Karta for HUF, Aadhaar is required. So, but for this, rest all cases, Aadhaar is not required. This is what earlier excluding list. Now they have refined this exclusion list in this new fashion. Now this new fashion, examination, don't worry. This is only for your knowledge purpose. What they say, person who is not a citizen of India, like definitely when you're not a citizen of India, how do they expect you to have an Aadhaar? They've excluded. So apart from that, department or establishment of central government, state government. So for these departments, they say you need not have Aadhaar. Local authority, you need to have Aadhaar authentication. Statutory body, like your railways or your national highways. No, these are all certain like NCA, ROC. Whoever has been authorized as a statutory function, this is not required. Public sector undertaking, not required. Person having applying for UIN, your World Health Organization, UNICEF, UNO, for all these people, they said Aadhaar authentication is not required. So this is one simple provision which is amended in section 2560. Now, this slide, what I'm going to talk, it's procedural, not relevant so meticulously from examination point of view, but as a procedure, like from your practical point of view. Applicant always, SSC comes to the professional's office and says, sir, I have given all the documents for registration. What happened to my application? When they ask those questions, we need to know this basic aspects, when how does the registration goes through and what aspects we need to take care as a professional. So the time limit for approving your grant of registration, earlier it was 7 working days, from which, earlier it was 3 working days, it was made to 7 working days from the date of submission of application. So once I file my application, I need to get a grant of registration within 7 working days. If no deficiency memo, no show cause notice is issued. Officer can reject the application by way of a deficiency memo, by way of any notice. If no notice was issued, none of the clarifications have been sought, then by default within 7 working days my registration has to be sanctioned. Earlier it was 3, now it was enhanced to 7 working days. Next aspect. Further, time limit for grant of registration after physical verification. Now this is a process where when we seek for registration, generally some officer will come for inspection. So why is this inspection required? Physical verification where Aadhaar authentication is not done. Person who fails to undergo Aadhaar authentication or does not opt for Aadhaar authentication. Now Aadhaar is your one mechanism of checkpoint. If the applicant who has filed for registration, it is not mandatory. Aadhaar is not mandatory. If I say Aadhaar, this physical verification generally will not be taken by the officer. If I don't choose, if I have not opted for Aadhaar, then the officer may come for physical verification of my premises. So this physical verification, if it has not been done, or who have not opted for physical verification, I have opted for Aadhaar authentication, but it didn't happen. OTP was coming, OTP was going to different mobile, I failed to do authentication. And then I'll write to the officer, look, I opted for Aadhaar authentication, I didn't happen because OTP or some issue was there. That point in time, for my registration approval, officer has to visit my premises. So here, the time limit for this physical verification from the date of filing, earlier it was 60 days, it was reduced to 30 days. 60 was reduced to 30. Going further, time limit for issuance of a notice where application is found deficient is increased from 3 working days to 7 days. Earlier, within 3 days, my application has to be processed. Now, that 3 days was enhanced to 7 days. Again, students, this is from your general understanding, not from your examination point of view. Let me go further. Now, in the process of your registration, this aspect of field visit, physical verification of your premises, right? This generally will be taken by a joint commissioner earlier. Now that power has been assigned to assistant commissioner instead of a joint commissioner. Any person below the rank of assistant commissioner or no, he can take a call with respect to physical verification. Though other authentication is done, if this assistant commissioner feels that it is required to visit the field, then assistant commissioner take a decision on that. Now, time limit for issuance of a deficiency memo from 21 days, it has been reduced to, enhanced to 30 days. So any physical verification, any physical verification of premises is done if the officer is not happy, if he wanted to have further documents to be verified, etc. Earlier 21 days was the time limit, now 30 days was the time limit enhanced. Just for your understanding, nothing to do from your examination point of view. Now, entire discussion I have summarized into this particular file, where any person who has not opted for Aadhaar or he has opted for Aadhaar, he failed for this authentication. Then, after physical verification, within a period of 30 days, my application has to be approved. It is for registration. I repeat, when I file my application, I am not chosen for Aadhaar. Having chosen for Aadhaar, I have not done the Aadhaar authentication. What do you mean by Aadhaar authentication? There will be a link. I need to press OTP for email and mobile. I haven't done. Then officer will come physical verification. After physical verification, 30 days officer didn't do any action. He hasn't taken any action. He has not rejected my application, nor raised any further questions. Then it is a deemed approval for registration. Second, I have filed my application. I did my Aadhaar authentication. So if the officer has not raised any deficiency memo, mandatorily within 7 days he has to approve my application. Proper officer issues notice seeking for clarification or any other documents. Once I have submitted my documents for clarification, within 7 days the officer has not taken any action, then mandatorily so much of my application gets approved. So this is my deeming approval under Rule 95. Now, this slide onwards, little important. I draw your attention very, very carefully for these aspects. Let me see any questions before I go further. So far so good, no questions asked apart from Annapurna's question. I hope you are able to see my presentation. Please confirm, whoever is watching, please confirm so that I can go further confidently that you are able to see the presentation. Amendments in registration. This is one major aspect. Registration to be cancelled. Now, this particular Rule 21 talks about your cancellation. Very, very draconian provisions. Now, Rule 21, there are few corrections or few modifications. First of that, few violations have been added for cancellation. Let me take you through one by one. Few violations added. What is that? First of that. Now, what is it? Cancellation. Cancellation of my registration. I draw your attention to this particular provision. As a proper officer who has been given the powers for this particular jurisdictional authority, the officer has a right to cancel the registration generally as per Rule 21. If the person has opted voluntary registration, no business was conducted for 6 months. After having registration, if officer gets to know that the SSC has been dealt with or dealing with your fake invoices, you remember there were a few this shadow transactions, window dressing was happening. Movement of goods doesn't happen. Just invoices travel, payment happens from one company to another company, input tax credit gets availed from one company to another company. So any of those cases, exceptional cases where I say contravention, then the registration of that person shall be liable for cancellation under Rule 21. In that Rule 21, there are 3 clauses added from this 22nd December 2020. What are those additions? First addition is with respect to availment of input tax credit in violation of provisions of Section 16 of Act or rules made under. So first aspect they have touched upon input tax credit. Any violation in relation to input tax credit, as a professional, you need to wait and watch with respect to your section 16. When I say section 16, now these days, as I said, automation, GSTR 1, GSTR 2B. These two information was automatically auto-populated into my GSTR 3B. This automation is what I was linking to section 16. Any credit which is auto-populated from GSTR to B, if I have taken the credit more than what is auto-populated as per to B, the officer will question, please explain why you have taken the credit. If I have not answered, if I don't have a proper answer, officer can invoke this rule 21 for the purpose of cancellation of my registration. Second aspect is with respect to furnishing of details of outward supply in GSTR 1 under 37 for one or more tax periods, which is in excess of the outward supplies declared by him in his valid return under 39. For the same tax periods, I have colored Form GSTR 1 compared with my GSTR 3B for one or more tax periods. What happened here? This point number 2, clause F, is very important. There are people who upload GSTR 1 very, very promptly. Why? The moment I upload GSTR 1, my customer gets the credit for that. My customer should not hold back my payment. For the fear of holding the credit from my customer, what I do, I upload my GSTR 1 correctly. When it comes to payment of tax, GSTR 3B I don't upload properly. Always I upload 10 to 15% of my actual tax liability in GSTR 3B. Here, the officer is invoking this clause F. Look, you have filed GSTR 1 correctly, you have not filed your 3B properly. Your turnover as per GSTR 1 is say 20 lakhs. Your turnover as per GSTR 3B is only 2 lakhs. So you are paying short to the tune of 18 lakhs. That is how this officer is invoking your provision, this clause F, saying that if you are not going to pay your taxes properly, I am going to cancel your registration. That is your clause F. Then clause G violates the provisions of section 86B. There is a violation of rule 86B. I just discussed this in session of 86B. In case if there is a violation of this rule 86B, straight away officer can invoke rule 21 and cancel the registration. Like Annapurna was asking one example, how do we apply this cumulative calculation? There we will apply this particular analogy, right? Next. Rule 21A, this is another major amendment made in the GST law, which is not that healthy transaction, which is not that helpful provision. There is one question from Annapurna. Let me take that question. If a person has failed the return within due date in the financial year 1920, but the return for 1819 was filed after the expiry of due date, in this case, how will the exception be applicable, or how will it be applicable? This rule 86B is applicable from 1st Jan 2021, Annapurna. I repeat, this exception is applicable from 2021, 1st Jan 2021. So any returns filed on or after 1st Jan 2021, we can say this is a restriction with respect to availment of ITC from credit ledger. It is not linked with a particular tax period or month, rather it is effective from 1st Jan 2021. If your question 1819, which is getting updated in 1920 or say 2021, then no choice, this rule 86B gets applicable. Your question is valid, where rule 86B can be thought of, right? Now coming to rule 21A. This is rule 21A is a extraneous authority, power given to the authority concerned. Now, rule 21A, sub-rule 2, there is a language, red color, striked off. After affording the said person a reasonable opportunity of being heard. Now, I'll read the provision and I'll explain what they are trying to say. Where the proper officer has a reasons to believe. Proper officer has a reasons to believe. What are the reasons to believe? He believes that assessee is a defaulter. He believes that assessee has violated the compliances. Now, reasons to believe, it should be just a belief or it should be a fact. Naturally, it should be a fact. He cannot have a dream, and as for the dream, he cannot take an action. So he has a reasons. He has got evidence to believe that the registration of a person is liable to be cancelled. Look at the language. Rule 21, suspension. Rule 21A is liable to be cancelled. Under 29 or Rule 21, he may, after affording the said person a reasonable opportunity of being heard, suspend the registration. So here, cancellation, you should have this natural principles of natural justice. You should provide an opportunity of being heard. In case of suspension, they say, don't give any opportunity of being heard. You suspend the registration of such person with effect from a date to be determined by him pending the completion of the proceedings for cancellation of registration under Rule 22. So here the biggest provision under Rule 21A, they say, if the officer has a right, he has a reason to believe that the assessee has contravened, is liable for cancellation. Why? I have discussed about your Rule 21. I have discussed about Section 29 has got a reasons, like business has not been started. You have you have contravened the provisions with respect to input tax excess availment, or with respect to Rule 21, where EFG, just now we have discussed 3 provisions. Any of these provisions have been occurred, the officer wants to cancel the registration. Here, before cancellation, the officer has a reason to believe that this application has to be suspended. What do you mean by suspension? The moment I say suspension, I cannot file a refund application. I cannot generate E-way bill. I cannot furnish my GSTR 1. I cannot furnish my GSTR 3B. Everything was kept on hold. Suspension. You are just brought to a standstill position. So this Rule 21A says that without giving an opportunity of being heard to the assessee, this particular registration can be suspended. Please keep in mind, suspension is different, cancellation is different. Suspension, initiation of a proceeding. Cancellation, determine that the registration is not required. Suspension is a temporary nature. Cancellation is a permanency in nature. Registration cancelled. It cannot be revoked. Once revoking period, everything is over, it's deemed that nullified. Suspension, they are in the process of cancelling the assessee's right. Right? So my section 20, this Rule 21A has omitted this opportunity of being heard, principles of natural justice for the purpose of your suspension of registration. Now, this is one aspect which I draw your attention, saying that it has got multiple aspects of connected with this particular suspension. It's a very big power given to the officer, and once he is suspended, till that has not been revoked, you are paralyzed. You cannot generate E-way bill on your behalf. Your supplier cannot generate E-way bill, nor your customer can generate E-way bill. That's the power of your suspension, right? So this amendment to Rule 21A, they have omitted this principles of natural justice. Let's go further. Now, Rule 2A has been inserted. In Rule 21A, there's a new rule which was brought in. Under this rule, there's a new rule called Rule 2A has been inserted. More authority was given to the officer. Now, people who doesn't have a backdrop of GST, I would like to draw your attention here. It's always like, you may get into, once you qualify, you may join a corporate as a financier. You may get into practice. But when you assist the client, when you assist the company, when you support a particular businessman, it's always important for you to understand the basic aspects of the compliance. This rules like Rule 2A of 21A is very, very draconian. Where a comparison of the returns furnished by the registered person under 39 with the details of outward supply in GSTR 1 or details of inward supply based on the details of outward supply furnished by the supplier in GSTR 1 or such as the analysis or such other analysis as may be carried out by on the recommendations of the council. Now here what is happening here? This particular assessee is doing a comparison. Let me get a tool for drawing. Yeah. So let me just take the annotation for drawing. Yeah. This officer is doing a comparison of what? Returns. He is doing a comparison of returns. These returns which are furnished. Like he is comparing GSTR 3B with GSTR 1, or the input tax as per GSTR 3B with the input tax, details of GSTR 1 filed by my supplier, right? So these aspects they are covering. They are saying that if your 3B compared with GSTR 1 of the supplier, this all is a analysis done. The officer who is having a jurisdiction has done the analysis, and on the basis of this analysis, what happens? There are some abnormalities. There are significant differences or anomalies. Once this analysis is done, as a chartered accountant, when we do internal audit, we do this stuff. I compare GSTR 1 with 3B. I compare my ITC as per 3B with 2B or 2A. I compare my books with GSTR 3B. Like what we do in our audit, the same way department fellow is also doing. In the process of his job, he found that there is a significant difference or anomaly, indicating contravention. There is an indication of contravention of the provisions of the act or rules. Then this may lead to cancellation of registration of the said person. His registration shall be suspended. So the officer is going to take a suo motu call under this rule 21A, where he is going to suspend. Straight away he is not going for cancellation. He is invoking this rule 21A for suspension. And when I say suspension, no intimation. He will not call you. Praveen, you have not filed your GSTR 3B. Praveen, you filed your GSTR 3B, but there is a difference. Please check and come back. Nothing of that sort. He will not send an email. Dear Praveen, hope you are doing well. Your returns have been filed for till May 2021. You are a happiest, you are a proper genuine taxpayer. But unfortunately, when I see the returns of April and May, the returns of GSTR 1 with 3B, there are differences. Kindly explain. Nothing of that sort. Straight away is going to invoke this rule 21A called suspension of registration. The moment I say suspension, why? Because he felt it's a contravention. Again, why? There is a difference between 1 and 3B. A classic example, human entry, data entry. Sir, while I was filing my GSTR 3B, a turnover of 32 lakhs should be entered. By mistake, I have entered 3,20,000. Again, on 32 lakhs, say 5,40,000 is output tax. I erroneously entered 54,000. My tax as per GSTR 1 and 3B. Turnover as per GSTR 1 and 3B. Difference. Straight away, officer can invoke this rule 21A for suspension. Not cancellation, suspension. And do you think that there is a principles of natural justice, the opportunity of being heard? No, ruled out. Straight away you can go for suspension. The said person shall be intimated. This action, as I said, no phone, no email, intimation through GST REG 31. So what is that REG 31? It is called a notice. Notices which come in since it's in your GST portal. Once I log into GST portal, there is something called dashboard. Under dashboard, there are notices for your action. The moment I click notice 1, 2, 3, 4, he'll say, Baba, you have not done this, you have not done this, you have done this, there is a difference. Now all those things will appear in my dashboard for assessee profile. There, using this form called REG 31, electronically, he is going to send a communication and also to his email. Also to his email address. Very, very important. One, I am going to upload REG 31 and also he is going to send a communication that please check REG 31. He is not going to say what happened. In the email, you will say there is a form called RG31 issued. There is a no registration has been suspended. Kindly go and check. So he says the details will be intimated in RG31 by sending a communication to his email address. So which email? At the time of registration, what you have taken, and on periodical basis, whatever emails you have updated, the latest email available with the officer is going to send that email. So be watchful. Like, are you giving the email of a junior assistant or a particular person who is leading the organization? Always there should be a unique email which is accessible to the company. So this intimation of suspension through RG31 is going to send to email. In which is going to highlight the same differences and anomaly. And he is going to ask him to explain. Now look, he is going to say, you explain why there is a difference within a period of 30 days as to why his registration shall not be cancelled. He is going to give a time period. Look, I am going to give you a particular period of 30 days. If you don't explain to me for those reasons, your suspension is going to become a cancellation. This is the authority which is vested under Rule 21A for the purpose of your suspension. I say suspension. Before I go further, let me see if there are any doubts further. Okay. So first of all, no doubts over here. Now going further, Rule 3A has been inserted in Rule 21A. Other than Rule 2A, Rule 3A has been inserted. A registered person whose registration has been suspended under 2 or 2A shall not be granted any refund under 54. As I said, the moment you have been suspended, no refund. Assuming that you have filed your refund application before suspension, the officer has processed your refund application. They're going to stop your refund. They're going to say, because there is a suspension of your registration, any refund you are entitled, I'm going to hold back that till that suspension is being lifted off. Provided that the suspension of registration under this rule may be revoked by the proper officer anytime during the pendency or proceeding before cancellation if he deems fit. So this officer is going to revoke this particular suspension anytime before the proceedings if he is going to deem fit. Means if you are going to show to the satisfaction of the officer that you have done a fantastic job of explaining. Right? Now let me come to a couple of questions. Before that, let me see if there are any doubts further. Just give me a minute. I'll see if any questions are there and I'll go further. Hope you are able to see. Hope you are able to see this particular Excel file. Okay. I've set few questions. Under this particular topic of registration. Okay. Coming to registration, what questions can be expected? Quickly, we will just recap what provisions we have discussed till now. First question, Mr. A has applied for registration 1st April 2021. He has not been served with any deficiency memo or any notice till 10th April. The working days 3 has been enhanced to 7. So if within 7 working days, if there is no deficiency memo, then he has to be granted with mandatory registration. Question number 2. Proper officer under GST has visited on 13th Feb 2021 for site inspection in pursuance to registration filed online. There has been no other authentication opted by the applicant. Examine the relevant provisions of GST for confirmation or rejection of the application filed by the officer. Also examine whether physical verification of the premises is compulsory under GST registration. So here you understand that generally 30 days, 30 days is the time limit for within which your application has to be approved. So within 30 days, if the application has not been approved, then it's a deemed approval if there is no deficiency memo raised. Then third question. Mr. A, Mrs. ABC Private Limited have availed input tax to the tune of 8 lakhs in excess of the credit auto-populated in GST 3P by supplier information updated through GST for the month of Jan 2021. Proper officer of GST has cancelled the registration of Mrs. ABC Private Limited. Examine the provisions. Now, please understand, when we read this Rule 21 read with Rule 21A, EFG, insertion in Rule 21, it says the assessee, the proper officer has a right to suspend the registration, not for cancellation. If the cancellation has to be done, a natural principles of justice where he has to be provided with the opportunity of being heard. So cancellation will not be invoked straight away. Last, point number 4. Mr. P, an accountant of Mrs. SSP Limited, has filed 3B erroneously for Feb 2021, wherein details of domestic suppliers have been omitted while filing the GST return. However, details of such supplier are duly uploaded in GSTR1. Proper officer under GST has suspended the GST registration of Mrs. SSP Limited. Mr. P has informed management that proper officer has exercised his authority unduly and sought for recourse under Article 226. What is that Article 226? It is nothing but a writ petition file, right? So here we will say suspension is not a right act. Cancellation is the right act. So Rule 21A is not appropriate. So these are the questions with respect to your GST registration. So let me come back quickly to your amendments further. E-invoice. Now this is one provision which all of you are you've read with. There was a chapter under registration. When we have discussed the chapter under registration, you have come across this particular provision. Coming to this aspect of e-invoice, e-invoice was made mandatory with effect from 1st Jan 2021 for a notified person. With effect from 1st April 2021, e-invoice has been made mandatory for a registered person having aggregate turnover exceeding a sum of rupees 50 lakh rupees. Initially, 500 crores was the turnover. Initially, 500 crores was the turnover. Later, this was reduced to 100 crores. October, this was implemented. With effect from January, that was reduced to 100 crores. And subsequently, with effect from April 2021, this particular turnover was reduced to 50 crores. 100 crores was reduced to 50 crores. Examination, what can you expect? A question with respect to applicability of e-invoice. I'll take an example. I'll give you an example how this can be calculated. Let me come back to my Excel file. Applicability of e-invoice. Financial year 2017-18. Financial year 2018-19. Financial year 2019-20. Now, let us look into these three financial years. For these three financial years, let me say turnover as per financials. 45 crore, 42 crore, 48 crore. Now, this particular assessee has got a registration in AP, Tamil Nadu, and say Haryana. Three states, this SCC has got a registration in the state of Andhra Pradesh, Tamil Nadu, and Haryana. And if I see the financial year for 17, 18, 18, 19, 19, 20, my question will be, with effect from 1st April 2021, is E-invoice applicable? What will be your answer? Yes or no? This is my turnover, rupees in crores. What would be your answer? Will you say that the registration GST e-invoicing is not compulsory? Is it compulsory? Good. It is not compulsory. You will say e-invoice is not mandatory because none of these 3 years turnover has exceeded 50 crores. Because the turnover has not exceeded rupees 50 crore, e-invoice is not mandatory. But if this example, I'll alter slightly. There is a distinct person, what you can say, deemed supply. How deemed supply for these financial years, for financial year 17-18, say 2 crore. Between the units, say there is a turnover of 5 crore, and during 19-20 there is a turnover of 7 crore. Now, my turnover as per financials is 45 crore, 42 crore, 48 crore. And my deemed supply 2 crore, 5 crore, 7 crore. First question to you. This deemed supply between one unit to another unit, will this deemed supply be reported in audited financials? Yes or no? Answer would be no. Goods supply from Andhra Pradesh to Tamil Nadu, goods supply from Tamil Nadu to Haryana, or goods supply from Haryana to Andhra Pradesh. Because it is within the PAN, only for the purpose of GST it is a turnover. For the purpose of audited financials, it is not a turnover. So, as per your section 2, clause 6, which deals with your aggregate turnover, my aggregate turnover, I'll put it here, will be 2 crores of deemed supply plus 45 crores. So, if you see here, in any of the preceding financial years, the aggregate turnover of the assessee should not exceed 50 crores, right? When I come to my presentation, let me come back to my presentation. They say having a aggregate turnover, my reference when I am talking about applicability, they say aggregate turnover during any of the financial year 17-18. Any of the financial years from 17-18. 17-18, 18-19, 19-20, 20-21. When I go year on year, I need to see aggregate turnover. And from where do I get my aggregate turnover? I get from section 2, clause 6. So I'll come back to my Excel file. Considering these things, in the financial year 19-20, since this exceeded 50 crores, you will say applicability of e-invoice is mandatory. So this magical figure of 50 crores, when I see, always link with your aggregate turnover. Aggregate turnover 50 crore and examination. What is expected from you? They will ask you to calculate aggregate turnover. They'll give you stock transfer. They will give you turnover as per financials. They'll give you some sort of adjustments. If you want, I'll give one more example for making you better understanding. Let me come back to my Excel file. I'll say particulars. I'll put the financial year here, 2017-18, 2018-19, and 2019-20. Say domestic supply taxable. So here 32 crore, I'll put the figures, group is in crore. 32 crore, 30 crore and 25 crore. Zero rated supply. Say 4 crore, 5 crore and 6 crore. Exempted supply. Say 2 crore, 1 crore, 1.5 crore. Deemed supply. I'll put serial number also. Other than 1 means in my serial number 1 that does not have a deemed supply. I'll take 6 crore, 5 crore, 8 crore. Fifth one, schedule 3 transactions 20, 22, 18. Now aggregate turnover as per section 2 clause 6. Now aggregate turnover, for the purpose of this I'll take domestic supply because it is forming part of, like when I say aggregate turnover, taxable turnover, exempted turnover, zero rated supply, sales between the same person having same PAN, say interstate supply of goods or services for a person having same PAN. These 4 elements I have to take into consideration. So I'll take serial number 1, I'll take zero rated supply, serial number 2, exempt supply, that also I'll take, deemed supply of same person, interstate supply of a person having same PAN, that also I'll take. Schedule 3, it is neither supply of goods nor supply of services. So for the purpose of aggregate turnover, I'll do this calculation. Now here, though there is a schedule 3 transaction, if you consider all as per financials for a minute, if I exclude as per financials, sign financials, what will be there? All these transactions, but for my stock transfer. This is my turnover as per financials. Now, this could be a scenario where my turnover as per financials is exceeding 50 crore. I repeat, my turnover as per financials is exceeding 50 crore. But for the purpose of my e-invoice, I'll come back to my presentation. For the purpose of e-invoice, when they're asking you to refer to aggregate turnover, so what is my job? I will not go blindly with my financials. My financials could be higher than 50 crore, less than 50 crore. But my job is redraft your turnover called aggregate turnover. So when I draft this aggregate turnover as per this particular Excel file, let me come back to my Excel file. Yes. So when I redraft, though my financials turnover is exceeding 50 crore, as per aggregate turnover defined under GST law, none of the years my turnover is exceeding 50 crore, e-invoice is not applicable. So this is one aspect which you need to keep in mind in case if there is a notice issued by the department saying that, look, you have exceeded your audited financials which you have reported. The offices generally, they have the information as per your income tax records, IT returns. So when they say IT returns, your IT returns is having so much of turnover, but you have not complied with your e-invoice. Where you will say, my dear officer, your attention from IT return, you should draw to you this term called aggregate turnover. Because it is not exceeding that magical figure of 50 crore, I will not comply with my e-invoice. Now, why is that we were talking so much of e-invoice? I'll draw your attention to Rule 48. Rule 48 in that sub-rule 4. What they say, any transaction of supply by a notified person has to be reported on IRP, Invoice Registration Portal, and a this IRN has to be generated. What they say, if you're a notified person, that person whose aggregate turnover is exceeding 50 crore. So they say, if you're a registered person under GST, leaving that exemption called SZ unit, or leaving exemption of insurance company or NBFC, those exceptions, you are a registered person, your turnover is exceeding 50 crore, all your tax invoices, all your debit note, credit note has to be reported to something called IRP, Invoice Registration Portal. And once you report, there is a unique number called IRN, Invoice Registration Number generated, which has to be mandatorily put onto your tax invoice along with the QR code. IRN along with QR code. Now, this is mandatory. Now, from buyer perspective, a person who is buying the goods or services from a supplier, if the supplier has not reported this document to IRP, where IRN was not generated or E-invoice was not generated, I as a buyer, I cannot enjoy the benefit of input tax credit for the simple reason they say, as per Rule 48, this invoice does not satisfy the conditions of how to issue an invoice. Because this is an invoice not issued as per Rule 48. When I say not issued, they have not generated E-invoice. If E-invoice was not generated, your customer, your buyer cannot enjoy the benefit of input tax credit. This is what they are trying to say. Now, let me see if there are any questions here before I go further. There are a couple of questions. Let me answer one by one. There's one question from Annapurna. One of my client registration was suspended because of not filing the return from August 2020. Later, while filing the returns to revoke the cancellation, the turnover in GSTR1 was 1,70,000, which was by mistake uploaded as 17 lakhs in 3B. Now the department has withheld the revocation, which should be done in this situation. What should be done? This case, Annapurna, we need to represent back to the department with the facts. You need to have your bank statement. You need to get a certificate from a professional chartered accountant saying that this was the data abstracted from financials and it was erroneous. It was a clerical mistake in terms of uploading the data onto the portal. Once you communicate these aspects to the officer concerned, I think the jurisdiction officer has to revoke the cancellation. Next, there is one question from Namita. Aggregate turnover we will get to know at the end of the financial year, but invoice for that year already issued for that year. Namita, when I am talking about E-invoice, they are saying that as on current date, you look into the previous financial year. I'm not talking about current year. You look into the previous years. If any of the previous years is exceeding that magical turnover of 50 crores, then you have to comply with E-invoice. So what if in the current year if I'm exceeding? The moment in the current year you're exceeding, from the day you have exceeded that 50 crores, get into the compliance of IRP, get into the issuance of E-invoice. So this is the answer to your question, Namita. Let me come back to my presentation. This is with respect to your E-invoice. I'll quickly come back to my presentation. Yeah. Hope this particular E-invoice compliance and calculation is clear, ma? Examination for November 2021, one aspect of your aggregate turnover, 4 marks you can expect a question from registration chapter or from your refund related chapter or your E-invoice compliance. Now, most probably for November 2021, E-invoice is a new concept. Calculation of this 50 crores is relevant for E-invoice. Not only that, for the purpose of calculation of your section 22, compliance with the registration also you can expect. So for all these chapters, I would recommend read this aspect called E-invoice. Going further, E-way bill related amendments. Not much. This E-way bill related, the benefit of validity of an E-way bill. They have reduced the time span. Now let me just pick this highlighter. Yes. Distance validity. My E-way bill is measured with something called distance. I repeat, my validity of E-way bill earlier was measured with something called distance. if I have to deliver goods from Maharashtra to Tamil Nadu, so the distance between Maharashtra, the point of dispatch till destination Tamil Nadu is say 800 kilometers. So per day, 100 kilometers, per 100 kilometers, 1 day validity was there. So earlier, prior to this amendment, for 800 kilometers, 8 days was given. Now, unfortunately, that 100 kilometers was made as 200 kilometers. So one day, up to 200 kilometers, 1 day was given. So earlier 8 days was given. Now after amendment, it was reduced to 4 days. For every 100 kilometers part thereof, 1 additional day. 1 day in case of other than cargo, and in case of a multi-dimensional, they have given 2 days. Now here, what we need to understand, this 100 kilometers was changed as 200. Earlier it is 6 days. Now it is only for 3 days. This is effective from December 2020. So not much to worry. Examination, they may not test you on this thing. Now this may be tested. E-way bill rule 138E, this would be tested for sure in your examination. Under rule 138, wherever that language 2 months was there, that was changed as 2 tax periods. Blocking of E-way bill, I'll explain you one by one this particular aspect. Blocking of E-way bill. Why E-way bill be blocked? There are contraventions under GST law. I'll give you the backdrop of this rule 138E, then I'll come to explain this thing. There are many aspects where the departmental officer is feeling that this assessee is not a genuine business person. Like he has been issuing a tax invoice without movement of goods. Or this assessee has continuously uploaded GSTR 1 with the right figure. GSTR 3B, there was a wrong reporting of turnover. Or the assessee has availed input tax more than what is available in GSTR 2B. Any of these reasons, officer believes that this person has no contravened. Then there was a power given to the GST officer to block E-way bill. Once I block E-way bill, movement of goods, E-way bill cannot be issued. As a supplier or as a buyer, now neither my customer nor my vendor, when they prepare E-way bill, my name, my GST number will not be permitted. Example, I have not filed my returns. Now, if I don't file, officer may block my E-way bill. So the moment the E-way bill is blocked, my movement of goods without E-way bill does not happen. And if there is an interception under your section 67, I have to pay huge penalty under 129. What is the penalty? Tax penalty equivalent to tax. Tax plus penalty, which is equivalent to the tax. So if I have consignment of 10 lakhs, 1.8 lakh assuming is my tax as per the invoice. Under 129, section 129, 1,80,000 plus 1,80,000. 3,60,000 will be recovered from me and then the consignment will be released. That's the seriousness of blocking of E-way bill. Now let's read further. Blocking of E-way bill for furnishing information in part A of E-way bill for a person who has not furnished his return. When I say return, it is not GSTR 1, GSTR 3B. Who has not furnished his return has been modified from 2 months to 2 tax period. So if an assessee or if a registered person has not furnished his returns under section 39. Why it is important to refer to return? My payment of taxes is linked with my GSTR 3B. So if I have not filed my GSTR 3B for 2 months, a blocking of E-way bill is possible. Now the term of 2 months was changed to tax period. Why is that? I'll come to my example. I'll come to my this Excel file to give you more clarity. E-way bill. Now there is one question which was set in your Excel file what I've shared with you today. If you look into this Excel file, it gives the clarity of this particular term of month replaced with the tax period. Mrs. ABC and Co. have not filed their GST returns for the month of March 2021 till May 2021. On 21st May 2021, when the accountant of ABC Co. tried uploading the details in E-way bill, the common portal has restricted the user from above updation. On inquiry with the jurisdiction officer, the officer responded that since for 2 months consecutively returns are not filed by the assessee, this rule 138 has been invoked by the proper officer. Examine the relevant provisions. Now here, what happened? March 21, April 21, May 21. 3 months I have not filed my returns. For a moment, without your due dates extension, 21st, March 21, 20th April 21, my April 20th May 21, and for May 20th June 21. Now here, the original language says, if I don't file my returns for consecutive 2 months, so if I don't file for 2 months, E-way bill is automatically blocked. Now, when is this accountant raising a E-way bill? My accountant raised E-way bill on 21st May 2021. 21st May 2021. On the day when the accountant was trying to raise E-way bill, this system automatically blocked. It's a configuration. Now, no one needs to tell system what it needs to do. Unlike human being always has to apply mind and do. But whereas in system, you just do a program for this particular registered person, 2 months, if the tax return, that is GST 3 was not filed, block E-way bill. The system has blocked E-way bill on 21st May. Why? April, May. 2 months consecutively 3B was not filed. Like February filed in March, March to be filed in April, April to be filed in May. 2 months this 3B was not filed. The moment 2 months point is triggered, my E-way bill under 138 has been blocked. Now they say, now look at this note, important. Due date for filing of GST returns for March 2021 has been extended till 31st May 2021. So for March, my due date is 31st May 2021. Now, so the tax period, now the language from tax month, it was changed to tax period. Now, system what it will do, the due date for March 2021, the tax period for March 2021 is 31st May. So, it will wait for 31st May. Further, for the month of April 2021, assuming my due date is assume it has been extended to 30th June. As of now, it has been extended 30th June 21. So what will happen? My system will wait till 30th June 2021. It will not block your E-way bill. After 30th June, that is on 1st July. On 1st July 2021, if the assessee has not filed return for March and April, two tax periods, if the returns are outstanding, then my rule 138E will be invoked. This is what my amendment says. Now, the department also felt, like see, when I have set a system that 2 months, naturally there is a time limit which is getting extended, and when the time limit is extended, I should not wait for 2 months. Because I gave a benefit of this filing of a return, I should give that real benefit to the assessee. That's how this language of month has been changed to tax period. Namita, for you, this provision was being explained, because like some of you have this zeal to understand why this amendment. If this is not there, what will go wrong? From that point of view, I'm trying to give that much attention. Now, let me see if there are any questions till now. Yeah, so far so good, no questions. Let me come back to my Excel file. Yeah, let me come back to my presentation. we are coming to almost the back end of this presentation. Last but one point here, your clarification was provided under Rule 89. There is no restriction under third provision on recipient of deemed export supply claiming a refund. Okay. For the benefit of students who doesn't know this refund deemed export, I'll explain in this fashion. Rule 89. All the refund applications with respect to export of services, with respect to input tax credit which has been accumulated. Like when you look into my refund application, I have given list of cases where refund application can be filed. But for export of goods with payment of tax, all other refund applications RFD01, I'll come to Rule 89. I repeat, but for export of goods with payment of tax, all other rest all refund, I'll come and look into Rule 89. So Rule 89 is important for me to understand if I have to file RFD01. In this, there is something called a concept of deemed export supply. Deemed export supply, where I make a supply to a person who is holding license under EOU, advance license or EPCG. So if I supply the goods to a person who is holding advance authorization or EPCG, I repeat, export this advance authorization or EPCG or a merchandise export. When I say merchandise export, a person who is called who is exporting the goods at a concessional rate of tax. Now this is called deemed export. I being a supplier, if I supply the goods to a deemed export and if I charge GST, I as a supplier, I can claim a refund or my recipient can claim a refund. I repeat once again this provision. Rule 89 talks about a refund application. Deemed export, generally, like I have used a language called advance authorization, EPCG license, merchandise transaction, where concessional 0.1% rate of tax is applicable. Now, these are the three provisions, like generally where import of goods and without payment of customs duty for the purpose of re-export generally happens. These transactions have been clubbed, not EOU. Please forget this term called EOU. So these three transactions were called as deemed export. Now, government wanted to give a benefit. If you export to this particular category, either the supplier can claim a refund or recipient claim a refund. Now here, there was one circular originally called 125. There was a mistake. Like when the circular was issued, the circular had actually restricted the input tax credit claim by the recipient. The recipient, the buyer, whoever is there, that buyer was denied the benefit of this GST paid by the supplier. Now, this Rule 89 actually, if you see, there was no restriction of ITC either by the supplier or recipient. When supplier charges GST on the buyer can claim the ITC and he can file a refund application for refund. Because under Rule 89, there was no restriction either to the supplier or to the recipient. What they have done using this particular circular, I have brought attention to this circular. Referring to this circular, the benefit has been given to the recipient. What they say, even the recipient can claim the refund. This is my amendment to third provision, Rule 89. Finally, I'll come to the next part of my discussion. This is the last slide of our today's discussion called refund, where computation of your turnover of zero rated supply of goods. Yeah. Calculation of your adjusted total turnover. Calculation of adjusted total turnover. Turnover of zero rated supply of goods. Now, while I was doing, like when we have this accumulated input tax credit under this Rule 89, under Rule 4, they have given an equation, they have given a formula. What they've said, in relation to supply of goods, I restrict your zero rated turnover to 1.5 times of the live goods domestically supplied. So when I have calculated, when I restricted your turnover, proportionately your denominator also shall be restricted. Now I'll explain you the formula. I'll explain you the formula and I'll take you to have a better understanding of this. So under this rule 89, I am a exporter of goods and I have exported goods without payment of tax. And when I see like 80% of my business exports, 20% of my business is domestic. I repeat, 80% of my business is exports, 20% is domestic. So when I look into my portfolio of input tax credit, always there is an accumulation of my input tax credit. So this accumulation, I go for rule 89 for claiming a refund from the authority. Now it's a mathematics. How do I know how much I can claim? 80% divided by 100% into ITC, I'll get my eligibility. That's the formula, right? I repeat, my numerator is turnover of zero rated supply. My denominator is my adjusted total turnover. When I say adjusted total turnover, that's nothing but exports plus domestic. As I said in my example, 80% is exports. So numerator is 80, denominator is 100. 80 by 100 into whatever ITC is there, that is my eligibility of refund. This is a simple mathematics. Using this particular circular, they say whatever turnover you are taking in numerator, the same turnover should be taken in your denominator. When I say adjusted total turnover, whatever your numerator is there, that should be considered even in denominator. To get a clarity for this, I'll go to my Excel file to explain this in a better fashion. Now, this is the last example as I was telling you. I have taken an example. You can refer to my Excel file for a better understanding. For a particular month, for a particular tax period, say my input tax credit in lakhs, IGST 450, CGST 225, SGST 225. I'll say total is 900. My zero rated supply is 3,500 lakhs. My domestic supply is 1,470 lakhs. Now this is all in lakhs. Now here, these goods which have been exported, I have been exported 350 quantity where my price per unit is 10 rupees. Now here, similar goods, if I have sold domestically, my rate per unit is 6 rupees. So what they have done, for the purpose of your refund calculation, they say 1.5 times your domestic supply value. So how do I do that? My quantity, export, how much I have done? 350 units. So that 350 into what they say, adopt the price which is sold in the domestic market. In the domestic market, I am selling for say 6 rupees. That product which I have exported, the same product I am selling for 6 rupees in the domestic market into 1.5. How much do I get? 3,150. So they say instead of taking 3,500, you should take 3,150. So here my denominator, my numerator. My numerator is zero rated supply of goods plus zero rated supply of services. What is my denominator? Adjusted total turnover. My denominator is nothing but adjusted total turnover. Here, how do I calculate that? My numerator is going to be adjusted, like 3,150 is my numerator. My denominator is going to be 3,150, that is your adjusted zero rated supply of goods plus your domestic value of 1,470. Say ideally, my total turnover should be 4,970. Ideally, my total turnover should be 4970. But under this particular circular, what they have said, look, your numerator, that is zero rated supply of goods, I'm going to restrict to 1.5 times of your domestic supply. How do I get that? Whatever quantity you have exported, that multiplied by the price which is prevailing in India into 1.5. I'm going to give you turnover maximum to the extent of 1.5 times, right? So this is going to be my numerator. The same while calculating denominator, domestic plus 3150. Now, into what I have to do, I'll just use this mathematical equation. This multiplied by my input tax credit of 900. So result will be 3150 into 900 divided by 4620. I'll get a refund of my eligibility refund is 613.63 in lakhs. Originally, what used to happen from exports 3500 divided by 4970 into 900. I was getting 634. So this thing they have clarified saying that no, this is not the method you need to calculate. 634 is not a right practice. You should do in this fashion. So friends, this is the circular which talked about your method of calculating your adjusted turnover. Right? Now this is the last. Okay, there is one. Krishna says there is a blur in screen. I think it is proper, Krishna. There is no other comments from others. I've come to the last aspect of my discussion. Okay. Now, before I wind up, let me clarify one point which was raised by our Namita with respect to this advance ruling. Friends, please keep in mind, advance ruling is always applicable only to the applicant. In case of this head office, Namita, the clarification which was sought by head office, which is there in Singapore, it is applicable for Singapore. All the material consignments which are cleared from Singapore till India, only for those transactions, advance ruling is applicable. For the other units which are subsidiary or which are the branches of this head office, for them, advance ruling is not applicable. Whatever the other jurisdiction officer feels, that may be adopted. But the advance ruling given on head office is not binding on the particular branches per se. So this is my clarification with respect to your point on your advance ruling. So friends, with this, I come to the end of our today's discussion. And this particular presentation, what I have discussed today, I made an attempt to bring clarity with respect to this questions which are asked from your examination point of view. Usually, 20% is a marks allocated for your major item. For November 2021, I have not touched customs and foreign trade policy. There is another faculty is going to take upon these particular provisions. So fairly 15 marks, 12 to 15 marks is what you can expect from these particular amendments what I have discussed in today's presentation. I made to the extent possible simple for clarifying these particular doubts, whatever were raised in the particular question. In case if you have any doubts which I have not answered, if you can put into the question window, I'll definitely get back to you and clarify to the email ID which you have provided. With this, I come to the end of my presentation. I thank Board of Studies and I also thank all the students who are actively participating in this discussion. All the best for your examination and thank you.